Okay, good morning everyone. Welcome to the channel again. You are with André Cardoso. Thank you very much for being here. I hope you enjoy my previous videos. If you didn't check those, please do. That will help you to get familiar with my process if you are new here. And for today I want to give sequence to the previous charts that I shared with you, and we will update some of those fractals we have for some of those currency pairs, but also for gold and silver, but not only. So stay tuned. Let's start with the cable. I'm just preparing a couple of other things here. We will start with the cable. We are in a 2 hours time frame chart, 4 hours time frame. As I said before, I was expecting the formation, and it's still possible to see the formation of this push to the resistance, so it's still possible to see the formation of this sharp pattern above, but we need to adapt. And what I see here is probably, and we need to wait for that to happen. This may also work as a heads and shoulders formation for the cable. We have kind of a support here. Let me just update these levels. These fractal supports, we have a new fractal already, a few points above. In fact, right there. And the resistance is already at the highs. The fractal resistance, we're still threatening the previous daily fractal, the daily fractal, a resistance printed before. So we're still threatening this daily fractal, the previous structure resistance. It's still possible to be used as a support level. So if the price starts to bounce from this price zone, even though I will base it on these highs here, I will not be surprised to see these as actually I'm seeing these as a potential head and shoulders formation. So I admit that a violation of the recent support may trigger a move to the downside. Let's measure the potential reward for these heads and shoulders. This points to a couple of points below the golden Fibonacci extension that I shared with you yesterday, projected at 120.63. So if you need to search for some convergence between a Fibonacci retracement and those levels, that points to a 50% retracement from all this swing high. So if that happens, and we need to wait, if that happens, I can imagine a situation like a fall below the support towards the Fibonacci retracement of 50%, or basically towards the 200% Fibonacci extension, which is the default target for that pattern. Even though, don't get surprised with a move to the upside. Of course, we have a fractal resistance at 122.89, which you need to wait for a violation or a breakout above, and that may trigger a couple of points to the upside. So let's stay tuned to those levels. So we have our fractals already adjusted for the cable, one at 121.72 and the other one at 122.89. We have major resistance at the previous highs, major support at the bottom, so we're still trading this range. Actually, we are threatening to leave the previous range between those daily fractals. Moving forward, let's go to euro versus dollar. I'm not sure. Actually, I think I shared this one yesterday also. Let's update some of these levels also for euro versus dollar. In fact, I shared this daily chart. We still, as I said before on my previous videos, we're still threatening this 108 previous pivot zone. So I will not be surprised to see a pullback. It's very similar to what we see here. Let me try to. You can see this pivot, this previous pivot zone, the previous resistance, previous support. So and then the price starts to fall, and then when the price starts to recover above these levels, look at this range. Okay, so we saw an attempt to recover the previous support. The market finds resistance and then starts to pull back again. I will not be surprised to see the same type of reaction from this price zone. Okay, eventually not so deeper, but the price, we need to fight with these pivots, so it may need some time to develop. Okay, we may need some time, very similar to the previous situation below. So don't be surprised to see euro versus dollar on a daily. This is a daily time frame starting to pull back. So let's go again into a lower time frame. So I projected before a sharp pattern at the golden Fibonacci extension, and the reason why, and I took a trade, so I took an option to sell, so I sold this very sharp pattern, expecting the price to expecting the price to react accordingly and expecting a retracement. The idea was try to short the market a few points above this previous structure fractal resistance, because I know that there was a lot of stops positioned right above, and this push to this price zone above the highs, triggering the pattern. So I thought it was a good risk reward, and it was a risk reward opportunity to go short. It happens, the market did not correspond to my expectations, and it was pushed to the 224% Fibonacci extension level. So we are now, we saw actually, as I said yesterday, we saw a very fast reaction to the downside after completing the pattern, and then the price recovers and prints a kind of a double top. As I said yesterday, it may develop, it may form, it may confirm a false breakout above. So we have the previous first highs and we have the second one, and as we can see, we have a new higher high. Note that we're still printing higher lows. Okay, so nothing invalidates the possibility to form kind of an ascending wedge, which requires probably a new higher high above the previous ones, and if that happens, we may see then later the price starting to pull back, or a clear violation of the wedge to the upside. So if that happens, we may see kind of a 1, 2, 3, a 4, and then probably a fifth wave inside the range. And you need to see at this point if the market will start to break below the wedge, or you wait for a breakout above the resistance. Okay, the market, and for that to happen, of course, we need to see the price starting to recover from the lows again. This is just one of the possibilities. The market starts to form an ascending wedge, moving sideways, kind of a correction, consolidation process. And well, at the same time, after this swing to the upside, we expect the market to pull back to the downside, but sometimes it's not the case. Sometimes the market will kind of print a correction, but inside of a specific range, like moving sideways, as we say. So instead of instead of going up and then coming down, the price goes up, moves sideways, and then keeps moving up. Okay, so let's not get surprised with more bullish momentum. As I said on a daily, if we are able to recover these 108, the previous fractals, we may see euro dollar starting to move even higher, at higher prices. Okay, so let's not be surprised with this eventual ascending wedge we may see the euro versus dollar forming here. Now let me see, let's update some of these fractals. For now, this is, of course, as I said multiple times, pure speculation. I like to be prepared. I don't trade, I don't push a trade just because I think there's a wedge forming here, so I will try to go long. You can try to take these patterns or these structures, you can try to go long from the bottom of this potential wedge, but I don't know if this is a wedge at this point, so I need to get confirmation. That being said, let's just update some of these fractals. We have a new, the 4 hours fractal support at these lows. We have the resistance at the highs. We still, as we can see, we have the weekly fractal resistance, the previous highs. We're still trading above this fractal. Obviously, that a clear violation, or not a violation, let's say a clear recovery of this fractal may trigger more downside momentum, but be careful, because as I said yesterday, there's also a potential or an eventual shark pattern projected right below this previous structure resistance, 107.25. So a fall below the fractal support, or at least the most recent one, what I have done here. A fall below 108.06 may trigger, even if limited, may trigger a move to the downside, and I will pay attention to a potential retest of this fractal with the formation of a shark pattern at 107.25. Let's go to the Aussie. Very similar situation. I shared this one yesterday. Potential false breakout above. I will expect, if confirmed with a violation of the fractal support, I will expect the price to start to search for the golden Fibonacci extension level 68.51. This is the golden Fibonacci extension of this last swing high in black. That's where the bullish shark pattern will complete, and it may converge with this 200 moving average approaching from below. Let's update some of the fractals also for Aussie. We have the resistance already moved to the recent highs. We're still threatening, actually we are recovering at this point, recovering the daily fractal resistance. This increases the probability for a move to the next support. Actually the next support is there, and a violation of this fractal, as I said yesterday, that will confirm this false breakout above for the Australian dollar, and that should trigger a move to the golden Fibonacci extension level. Okay, so that's my expectation. If the market breaks below the support, I will expect the price to search for this golden Fibonacci level. We have fractal support. In fact, we have the daily fractal still positioned there. We have the weekly resistance, all fine, and we have the most recent fractal support also there, right below the daily previous fractal resistance. So let's pay attention to this. Let me tag this price zone 68.52 for the Australian dollar. The Kiwi, and the Kiwi, I need to delete some stuff here. I need to clean these charts. For now, this is not so real. This is just one explanation that I shared with you yesterday. Not real for now. Let's stay focused on the levels. We have the daily fractal needs to go to the bottom. I have the recent resistance. The previous daily fractal remains positioned at 64.11. The the most recent fractal resistance was forwarded just a few points above, right there. So we're still trading this range between, let's say, between the daily support 63.13 and the recent fractal at 64.26. So we're still trading this kind of, it's not a parallel channel, but it's almost, and it can be, it can form kind of a flag pattern there. But for now it's moving kind of a sideways, and we have eventually a wedge. Let's see how the market develops from here. I can see a retest of the daily fractal support and eventually a retest of these lows, but the shape starts to vanish for the potential cup. I need to see the price starting to recover immediately to the high. So if the Kiwi spends a lot of time moving sideways, I will lose the shape, and I think I started already to lose the shape for the potential cup. Yeah, unless it starts to recover immediately and starts to retest the highs. Well, nothing in particular for the Kiwi. As I said yesterday, I'm paying attention to potential moves to the upside and the formation of this bearish shark pattern at the 224% Fibonacci extension, and that is based or supported by these false breakouts below, confirmed already after a breakout of this resistance, as we can see. We saw the violation of this fractal, so I admit a move to the highs and the formation of this shark pattern for the Kiwi. But of course you have euro versus the dollar, you have also the Aussie. If those starts to fall and probably inverted with the dollar index, which may start to move to the upside, the Kiwi of course will follow, and eventually it'll start to fall from these price zones without completing these patterns above, of course. So pay attention to the general, to the Dixie. I will cover that. Actually, I can go there now. And let's stay focused for now on lower time frames. I shared already those charts on a daily and higher time frames. Let's keep focus on these potential inverted head and shoulders for the Dixie. As we already know, we only confirm this pattern after a violation of the next zone. So we have a new fractal resistance at 102.55. We have the previous highs, we have a previous fractal right here at 102.65, okay, 10 cents above. I admit that a violation of this resistance may trigger a move to the 200% Fibonacci extension, which is the default target for the inverted head and shoulders. that is projected at 103.30, and that converges, as you can see, with the 38% Fibonacci retracement from this previous and recent highs, a daily fractal at 105. So if you want to zoom out just to understand why I'm measuring this small retracement of this last swing low. So we have convergence between that minor Fibonacci, 38% Fibonacci level, and the default target for the inverted head and shoulders. Of course, if you looking into this picture, and that perfect convergence may increase your desire to participate in this trade, but honestly, and based on my small 11 or let's say shorter 11 years experience, if you do that, you will suffer the consequences, because you have no confirmation. The pattern will react accordingly to the default expectations. You are entering too soon in this trade. You need to wait for the breakout of the resistance. And if you need to go into a 5 minutes or a 15 minutes time frame to confirm that, go into a lower time frame and try to take advantage of these breakouts above 102.65, because it may trigger a momentum, or at least, let's say, a limited move to the 200% Fibonacci extension. The trade can be maximized, of course, if the price keeps moving forward, but that's not the default expectation. Wait for the confirmation and trade based on your default expectation. This offers you a very limited reward, which you can use, as I said yesterday, as a measure to identify your maximum loss. Okay, you can't even push your stops below the head if you want to trade this one. It's very difficult to trade this one, because you really need to see the price rejecting again this resistance after the breakout above. So as I said yesterday, you need to wait for the breakout below the resistance. We need to see the price coming back again and retesting that zone again and rejecting that zone again, the neck. The market needs to turn this resistance into a support. And after that happens, that may trigger a move to the upside. And because of that, you don't have a range or a decent risk-reward ratio, which allows you to protect your position below the head, unless if you have targets, kind unrealistic targets. So I will point to the 200 moving average. Okay, you have no real motive to trade or to put your targets at these levels, because the default expectation for the inverted head and shoulders, it's projected a few points below. So that being said, you lose reward for your risk, and it makes no sense to trade with higher risk than the expected reward, as I said multiple times. So this trade by itself does not offer you the best risk-reward approach to trade, even though there are what I call aggressive shots or aggressive trades. And if for some reason you belong to this kind of a small group of people, if you like to trade aggressively, and sometimes I don't belong to that group of people, but sometimes I like to wet. I wet my feet, and well, sometimes I push a trade aggressively because it's a small position. I'm just trying to push the price above the resistance, and for some reason I have other indications or other signals, like a MACD breaking to the upside or something else triggering the motive to trade. Very few times I push a trade aggressively at the breakout of a neck zone, but if somehow you belong to those group of people or that group of traders, you have 102.65. It's your next zone. So if you see a clear breakout above, or if you see the price breaking above these resistance, you can try to take this limited move to the upside and try to play it with a smaller risk position initially. So, but it's up to you. But I'm just showing you a potential pattern, which may trigger even if limited, it may trigger a momentum to the upside towards a specific price zone. So you need to decide what to do with this. The trend remains bearish for the Dixie. If you put your time frame, and you can see from the left to the right, you can see the price moves down. So it's a clear momentum to the downside. Be careful when you push a trade to the upside contrarian to the trend, because you need to adjust. You need to be in perfect or in full control of your risk when you trade those patterns that I show you here. Not only the pattern that I show you here, because you need to be in full control of your trading account when you trade the financial markets, not only just because you trade harmonic patterns or reversal patterns. That doesn't mean anything. You need a full control of your risk when you trade. So basically, be careful with those situations. Let me jump into the dollar versus the yen, because I shared these charts also on Twitter last night or last evening, and as we can see, we are now threatening the previous fractal resistance, 128.86. So I say that we are now threatening the next zone of the inverted edge and shoulders, also for the Japanese yen, and I will not be surprised to see a move again, even if limited to the 200% Fibonacci extension. This pattern suggests, let's say, a retest of these previous lows. We have targets for the pattern a few points above, and that default target projected at 130.21. It's also in convergence, let's say, with the minor retracement, let's say the minor 38.2% Fibonacci retracement level. So we can see a retracement from the lows to the 38% Fib, converging with these 200% Fibonacci extension. It's very similar with the Dixie. Of course, the trend remains intact. We still need to see, as I said yesterday, I still need to see a violation at least of this fractal in order to consider the potential move to the upside for the Japanese yen. Moving forward, and in fact we have already our fractals updated, one to the bottom, to the lows, 127.22, and the other one that I show you now. Kiwi, Aussie versus the New Zealand. I called your attention yesterday for this chart and the potential breakout below this channel support. So we have this, I draw this as a parallel channel. We see we see the formation of this kind of a wedge, and we are now breaking the parallel channel, or let's say the structure support. So we are now breaking below this channel, and we are also recovering the previous daily fractal resistance. That opens a door for the retracement, as I said yesterday. So that's, I think it has started already. Fibonacci retracement level from the bottom. Let's put the full fibs there. We have those Fibonacci levels projected right there, and at this point there's nothing to say unless the price approaches this previous structure in fractal support. So I admit an approach to the previous structure highs and previous structure support. So we have kind of a pivot zone between previous structure resistance and support level. So I will point to the previous support 107.88. That being said, I admit Aussie, as I said yesterday, I believe I said that it's one of the most, at least in my opinion, it's one of the most respectful pairs to trade the patterns. That means every time you see a specific pattern, it doesn't matter if it is a channel or a wedge or an advanced pattern formation, it tends to react accordingly. So in this case, as I shared with you yesterday, we have this 224% Fibonacci extension, a very sharp pattern right there, and we start to see the price pulling back. So basically, I will not be surprised to see the 38% Fibonacci retracement as a start for the pair, and then eventually we have default targets for the shark pattern at the 50% fib, so that will not be a surprise at all. So let's stay tuned on this one. We have the fractal resistance. In fact, already there. Let me just activate magnet. Fractal resistance, the fractal support. The fractal support, in fact, it was printed there, and it remains there for now. So we are breaking the fractal support, the most recent, and we are recovering, as I said, the previous resistance for Aussie versus the New Zealand. Dollar versus CHF. Let's go into a 1 hour time frame. I will show you again those patterns. In fact, let me go to the definitions here, the settings, and decrease these to 1 hour time frames. So dollar versus CHF, we have these major channel as I draw here yesterday for you. So we have this descending channel. We're still trading inside that range. We are approaching again the regression trend line, the midpoint of the channel, and as I said yesterday, we have also one eventual crab pattern projected at the golden fuse. So for now, this is pure speculation. We are closer of, actually let me try to pick, no, I don't want this. Well, we have before that crab pattern projected below, we have the 113% Fibonacci extension level right below the daily fractal. So I admit that there will be a lot of people not only trying to go short below the previous lows, below the previous support. At the same time, I have no doubts there was, and there still be, a lot of people trying to go long without breaking this support. Okay, so I admit there is also, of course, stops positioned right there. We have stops positioned below this fractal for those who want to try to go to the upside without breaking these lows, because for some reason they think, or they have a study or some indications that, or some signals, the price will find support below these lows without breaking these lows, and they admit the possibility for a move to the upside. So if you want to trade from above these highs or these lows, of course you have to put your stops somewhere. So when probably, or let's say there is a higher probability for a large number of stops being positioned right here, right now. So which means if that pattern, if you see the price approaching from these lows and breaking this support, that will hunt those stops positioned there. And at the same time, those who want to short the market with a breakout of these support, they will put their stops a few points above the fractal. So if the price recovers, I will exit. And that's exactly what I think it may happen. We may see the formation of the shark, but of the alt bat pattern, hunting the stops positioned below the fractal for those who want to go long, and then you see the pattern reacting accordingly, hunting the stops positioned there for those who want to go short, and then it's a free road. Then then we need to wait. Actually, we need to wait for further developments. But this is what I will expect. I will expect the 113% Fibonacci extension to be hit, and then I will expect a reaction. If that reaction fails, which means the price will not bounce from the 113% Fibonacci extension, which means those who have shorted the market below the support may survive the short side, I will pay attention to the bottom of the channel, and I will pay attention to the 161.8% Fibonacci extension level, 90.48, 90.46. So this is the golden Fibonacci extension. Okay, I prefer to wait. Probably I prefer to wait for this crab pattern to be completed at the bottom of the channel. That may offer me a much better risk-reward opportunity and friendly risk-reward opportunity to trade than trying to engage with this shark pattern or this alt-bat pattern at the 113% Fibonacci extension, even though this scenario is very well possible. That doesn't mean, again, let me put a note here, that doesn't mean you should short the market here, because in fact it can also bounce without retesting the lows. It can bounce from this price zone without completing any type of or any pattern that I'm expecting, and starts to bounce, and I need to adapt or readapt to the price action then later. Okay, so but stay tuned with this daily fractal. We have a fractal at 91.67. It will be crucial to see if the price breaks below, if it holds above, or if it sinks actually aggressively lower. Okay, we need to see that. Dollar CHF, we have a new fractal support. We have a new fractal support right here, the most recent one, and of course we have not this one, we have this one as resistance. Daily fractal remains at 91.67, as I said, daily resistance at 93.63, monthly fractal support above, so we are trading below. Let me increase this time frame again. We are trading below the previous fractal support and weekly fractal, but also the previous one, the monthly fractal. We have a major resistance above, of course, 101.48. So big channel to the downside, or let's say descending channel. Pay attention to this dollar versus CHF. Let's go to the Canadian dollar. We have a daily support already moved to the lows. The daily resistance remains at 134.59, and we have a new fractal right there. And that's it. So yesterday I called your attention to eventual move to the upside above this daily fractal. We have also, as I said, we have also this potential false breakout below. The same methodology will be applied here as always. False breakout followed by an extension to the golden Fibonacci extension. So we have that shark pattern and that potential shark pattern projected initially at 135.43, and of course we have also the 224% Fibonacci extension. The market can also be pushed to the 224 and form the pattern there, which may converge with, well, both patterns may converge with a retest of this descending channel resistance, but pay attention to both of these levels. First one at the golden Fibonacci level, 135.43. So this is where the golden Fibonacci extension is now projected for the dollar versus the Canadian. Moving forward, Norwegian krone. Some of the examples that I showed you yesterday. Let me delete these. We don't want confusion. Let's keep that channel extended to the right, and let's update some of these fractals. So we have already a new fractal right there, by the way. The daily support remains positioned at 9.82 right there. Daily resistance, in fact, it was already moved to these highs. The most recent resistance, 93.78, and this is already our weekly fractal resistance at 10.30, and that's what we have for the Norwegian krone. Attention to these lows, attention to these highs. A violation of the highs will confirm a false breakout below, and as I said multiple times, that sequence, or that should be followed by a search for the golden Fibonacci extension. That Fibonacci extension is now projected at 10.17. So pay attention to the eventual breakout above the daily fractal resistance, which may trigger a move to the upside and searching for this golden Fibonacci extension level. On the other end, or the other face of this coin, a fall below this fractal support. I'm not sure if I have this Fibonacci projected below, not yet. And I'm not even sure if I projected that Fibonacci that I will show you now yesterday on last session. This last swing high, it was followed by a retracement, and eventually the market still in that phase. A new move to the upside may change the pattern that I will show you now, but the recent behavior that we have may also help the projection, at least the projection of a bullish crab pattern below at the golden Fibonacci level. So we have this move to the upside, then we have a pullback, again the formation of this resistance, and if the price keeps trading lower, we have also the possibility to see the formation of this deep crab pattern projected below. It's a deep crab pattern because the price finds support very close to the 88% Fibonacci retracement at this point. Okay, we have a new low, a new fractal right there, right above the 88.6% Fibonacci retracement. That's the only reason why it's called a deep crab pattern. If the market finds, let's say, support at the golden Fibonacci and then completes the crab pattern at the golden Fib, it's just a crab pattern. Somehow, Scott Carney decided to differentiate both of those patterns. If the price at this point falls into or creates a deeper pullback to the 88% Fibonacci extension and then later completes the crab pattern, this will be called the deep crab pattern formation. So it's still one of the possibilities, even though we are very far from the completion of that pattern. We need to pay attention to a violation of these previous fractals, in particular the breakout of the support level, the weekly fractal at 9.69. So I admit that a violation of these lows may trigger a move to the downside. Let's see how the market will behave. We have a range for now, 10.03 and 9.82. So we have this range to watch, and eventually a breakout, as I said, a breakout of the resistance may help the formation of the shark pattern above, and eventually we are closer of this one than the formation of the crab for sure. So pay attention to this eventual shark pattern for the Norwegian krone. The Mexican peso, it's kind of a wannabe the Aussie, building perfect channels, which is not so so usual for the Mexican peso. I'm joking, of course, but we can see the Australian dollar. It's usually one of the best pairs in terms of patterns to trade, and very clear momentums and very clear price structure to trade. And somehow the Mexican peso has decided to join this process, and we are now facing this perfect descending channel, which it's funny because it starts to build this channel when I decided to join a trade to the upside. So it was funny to see my entry, and then the price starts to fail and build a perfect channel to the downside, just saying, André, you are wrong, and you will be wrong for a specific period of time. You should get out of that trade, and that's what happens. I get out of the trade, and sooner rather than later. Of course, it's always sooner rather than later. If you push your stops, or if you trigger your stops, it's because you have a strategy to trade, and if you have a strategy to trade, it's the only way to survive these markets. So if you are wrong, and if the market proves that you are wrong, get out of that trade and move forward. But it is a clear channel. We have a new fractal support already at the lows, and we have a new fractal already moved to the recent ones, actually right there. The recent resistance remains intact at 1885, and well, for now we are now, as you can see, we are now threatening this channel, this descending channel resistance right now. It may print kind of what we may call an outside return when they start to threat the violation of this perfect channel resistance. people will start to try to go long, and then it's an outside recovery of the channel. So the market will print a new resistance above and outside the channel, and then it will resume the momentum. Of course, I'm not sure what will happen next, and I'm not even worried about that, because I need to see, at this to pay attention to this pair, I need to see 1850, 1849 being reached. So I need to see the golden Fibonacci extension right there. I need to see the price there. For that reason, I don't have any interest for now. If the price trades at these levels, as I said, we have these crab pattern projected right there, so I will pay attention to that possibility if reached. So for now, just a small update on this recent fractal from the previous lows to the recent one, 1876, and the resistance remains the same as yesterday, 1875. Dollar versus the yen already covered, potential inverted edge and shoulders. And now I want to, yesterday I didn't cover the euro, the pound, the New Zealand, and the Kiwi, and the Canadian. The Canadian, there's a pattern that I pushed to my subscribers, which was this bullish pattern. And for now there's nothing to say, and it will be very similar to the ones that I will show you now. And if you increase your time frame into let's say 12 hours, or let's go into a daily, it's much better. If you go into a daily time frame chart, you can see, and if you measure this pullback, so this is a 7.4% pullback for euro versus the yen. And many of us may see this as a potential inverted edge and shoulders, very similar to the DXY or to the dollar versus the yen, exactly the same main currency here. So we have this potential inverted edge and shoulders, and that's daily fractal resistance is acting as a next zone. And it is acting as an axon not only for the potential inverted edge and shoulders, but also for what I call a technical double bottom. Note that we are also trading a retracement from these lows. If you put a retracement there, we are also facing the 38% Fibonacci. In fact, the market has found support between the 38 and the 50%, okay? So that means that I will not be surprised to see these kind of a reversal behaviors, kind of a technical double bottom or an inverted edge and shoulders printed at this price zone. Usually we will see, when the price starts to pull back from the highs, we don't expect to see this type of patterns there. And every time that let's say there's a probability to identify that pattern and for the pattern to fail. And for that reason, we really need to see a clear violation of the resistance. Most of the times you will see the price building the pattern, eventually even approaching the validation point, with the threatening the breakout of this resistance, and then the price starts to trade even lower, printing new lows below the head and shoulders. Okay, so don't try to rush. That's just a note to not to rush, just because we have some specific signals here. Don't try to transform these signals into clear evidence or clear motive to trade. Okay, let's not do that. What I see now, it's a potential technical double top, and let me zoom in. So for on a daily time frame, I don't use I don't have actually the daily support. It's already, it was moved here. The daily remains there. I don't use the 4 hours fractals on higher time frames. So above the daily time frames, you will not see the 4 hours and the 1 hour fractals that I used to have on my charts. So on a daily, let's zoom in and let's pick a trend line. And as you can see, we have the closer, the lower close of the first bottom right here at 138.17. Okay, so this is the first close of the first bottom. What we can see here for now, and nothing, and I like to rephrase these multiple times, because really, if you rush into those trades, probably you will lose money. So don't try to do that. What I can see here is a technical double bottom when the second bottom retests the close prices of the first one, and then it starts to close above it. So this is one of the criteria that I use to identify a technical double bottom. I have the V shape between the lows. Okay, we have a clear V shape between the price action. But we have also another criteria that I use, which is a close above the previous lower close, not the lower low. We have the lower low, we have a new fractal right there. I'm talking about a retest of the close prices of the bottom. I think I made myself clear until now. So, and to measure the potential reward for this pattern, I always measure that same distance between the close price at the bottom to the close price at the highs, and I search for the 200% Fibonacci extension as my default target for that pattern, for that specific pattern. We need to see a clear violation of the fractal, not the higher close. I need to see a clear violation of the higher high to confirm that, to validate that the potential, or let's say to increase with the probability for the pattern to work. Okay, so we really need to see a clear violation of the daily fractal, and this situation that I'm showing you here, it's exactly the same that is happening for most of the Japanese yen currency pairs, the crosses. The Japanese, the pound versus yen may also complete a double bottom, not a technical double bottom. As you can see, the pound versus the yen, we have a new close, a lower close below the previous lows. So that's also a signal that something may fail here. Okay, so let's not rush. But we have also potential false breakouts below or a double bottom right there. We have the Aussie that I shared yesterday, 87.97, the lower close, the retests. We have already a breakout above these highs, the neck, and already pushed to the golden Fibonacci retracement. This is also what we call the 2618 setup. So we expect to see the price moving to the upside. Okay, golden Fibonacci extension, we have what we call the bullish 2618 setup, double bottom followed by the retracement to the golden Fib. So I admit a move to the upside, and as I said yesterday, I always target an ABCD pattern, a symmetrical pattern above. Okay, the New Zealand, also the same potential double bottom wait for the breakout above the resistance. The Canadian, the same. We have the shark pattern, or actually we have the crab pattern at 95.82. Very fast reactions from this price zone, but we have also potential. This is also potential 3 drives pattern. As you can see, a new lower low, new lower lows, probably nice divergence right there, as we can see, between these lows. So that forms also the 3 drives pattern formation. So that pattern should target this price zone. This is a default target for the 3 drives pattern formation. So basically another pattern emerging at this point for the Canadian versus the Japanese yen. It's a very interesting pattern because it doesn't require a lot of risk to trade. So you can see if the market breaks the lows, it will vanish immediately with the sequence. We just need 3 lower lows to complete the 3 drives pattern to the upside. So and you need to target the first high of the pattern after the formation of the first one. So you have the first low, pullback, the second low, another one, the third drive, and then we should see a retest of these highs as a default expectation for the 3 drives pattern formation. Of course, if the price fails, you don't need a lot of risk to trade this pattern. Okay, you just need to see a violation of the lows, and eventually the market will keep trading even lower. So there's a risk, of course, to fail on every single pattern that I'm showing you here. I don't have any. Actually, let me update these levels. Euro versus the yen. I forgot to update the lower time frame. The lower time frame fractals. In fact, we don't need them. In fact, they are very close to the 4 hours remains the same, and we have a small support here, small fractal right there. Daily, weekly, all fine here. Yeah, for the yen pairs, I don't need to update anything. In fact, I'm more focused on a daily time frame, and I'm focused on these resistance for all of them, and we are far from those levels for now. I suggest to put some alerts below, a few points below those fractals for the yen pairs, because, well, it may trigger, as I said, that pattern, the double top or the double bottoms. Euro versus, let me go to a lower time frame and give a look and pay a look to this and give a look to these charts. Euro versus the pound. I projected a very sharp pattern at 89.34 above. It's still possible to see that pattern if the price keeps rejecting, or let's say if the price keeps holding inside this channel. If the price starts to recover from this price zone, I will not be surprised to see that pattern being formed later. But we are already trading back to the previous fractal resistance. So this is a fractal resistance from these highs, and I admit that a recovery of this fractal may trigger a deeper retracement for the pair. Note that I have a parallel channel. I draw a parallel channel there. I think it's still possible to see that let's say the reinforcement of this resistance later, if the price, as I said, if the price holds above the channel, above the trend line support, it may happen. It may trigger a retest of the highs of the channel again, or the reinforcement of this resistance, but only time will say. For now, I'm focused on the potential violation or the recovery of this fractal resistance, which may trigger a retracement eventually towards the previous fractal support. We can draw also a retracement from the previous lows to the recent highs. We have also the 38% Fibonacci retracement at 87.63. So I will not be surprised to see a violation of the, or a breakout below again, the recovery of the previous resistance, triggering a momentum or a retracement towards these previous lows. Of course, if that pattern completes above, you will pay attention to potential pullbacks again, and based on what we have at this point, if that happens, we will point to the bottom or to the trend line support again. If that pattern completes above, we may see a retracement, a pullback to the channel support. It's basically the move that we have now. I was expecting to see just a few points above. Okay, so that being said, that's what I was expecting. Now I'm paying attention to the potential recovery of this fractal resistance. Nothing for the euro versus the New Zealand, euro versus Aussie. I had someone, I think it was, I'm not sure if it was a subscriber or not, but I think I have someone asking for euro versus the Australian dollar. Very, very nervous, as you can see, a lot of noise here. Not one of the best pairs to pay attention at this point, in my opinion. Very choppy, but inside what we may call, at least for now, and that will depend on further developments, let's say, on further price action, but this may work as an ascending wedge, and eventually we will see a new move to the upside, a retest of these highs again, and that may help the formation of this shark pattern that I have projected at the golden Fibonacci extension level. We have kind of a false breakout below, as you can see. We have the previous lows, new lower low, and then the price breaking above the resistance. As we can see, previous resistance acting as support, and that may help. Let's say a new higher high will for sure put the price very close to this golden Fibonacci extension level, and if that happens, we may see another pullback. We may see another pullback after the formation of the pattern, but let's wait and see. We have major resistance now acting as a support at 153.97. So while above this monthly fractal resistance, I favor upside momentum for this pair. Of course, if the price recovers the fractal, it may trigger, well, even if limited to the 200 moving average, we have a daily moving average now pointing to 151.04. So I admit that if the price, so we have a small range here, as you can see, between this daily fractal and the previous monthly fractal resistance, which is now a support. So basically we have that range. If the price trades above the resistance, we may see a move to the upside. If we see a breakout of this or a recovery of this fractal, of this resistance, this major resistance, we may see the price searching for the 200 daily moving average. So if that happens, we will pay attention to that. For now, and based on what I see at this point, I'm expecting to see kind of an ascending wedge, and eventually third drive to the upside, forming a new higher high and forming this bearish shark pattern. I will pay attention to the 60.87. The Dixie covered already. Gold I shared yesterday. Let's keep this on a daily to keep our mental wealth intact. I shared this pattern before. We have previous structure support levels. In fact, we have this previous fractal, as we can see by these red candles you see on my chart. That means the price is trading on extreme overbought conditions. The same way when you see the green candles, you see the price breaking the structure, oversold conditions. Okay, you see the breakout of this kind of a flag or a triangle there, the consolidation, a breakout with the price entering on extreme oversold conditions. So every time you see a red or a green candle, it's an oversold extreme level. Every time you see a red candle, it's an overbought extreme RSI level. So we are trading on extreme RSI overbought levels, converging with this previous fractal resistance, but support, I'm sorry, but also this bearish crab pattern that I projected once the price breaks above this support or this resistance. I'm sorry, 1729. I saw the breakout of this next zone. We have the 200% Fibonacci retracement. Some of you may not be able to see it, but it's here. We have the 200% Fibonacci extension at 1831. So this was the default projection for this technical double bottom printed below. And when we start to approach this level, I projected the potential crab pattern at 1927. So yesterday, it was a very nice reaction, the completion of the pattern, the golden Fibonacci level, previous structure support. It may turn into a resistance. So we have a position for the short side of this trade, of course, and we have targets at the 38% Fibonacci retracement. So basically, I'm targeting the previous daily resistance on gold. So I have this short side position. I can be wrong, of course. This is a position already that I was expecting quite a few time already. So I will not let's say I will not regret to get involved, and if the price fails me, it's all right, because sometimes the market will reward me, sometimes the market will fail me. I just need to keep my pace because I know it will work for me. That being said, I have shorts position for gold from this price zone towards 1808, which is my first target projected there. WIT, and there's no need for further updates on fractals on gold. Let's see the WIT. We have a new, actually we need to update some of these for crude oil. Fractal resistance right there. We are breaking above the fractal. And as we can see, and as we said yesterday, we are approaching the 88.6% Fibonacci retracement for the crude oil. Let me adjust these Fibonacci retracement levels. So I will not be surprised to see. Let me first of all, in fact, we are approaching overbought conditions again on RSI on a 2 hours time frame. But there's always, of course, there's always room to the upside and always room to the downside. We don't have a clear picture of when the market will stop or not. But as I said yesterday, instead of trying to, and because we have these, as you can see, let me change this to blue. We have this kind of a consolidation moving sideways. This is a kind of a flag pattern after this move to the downside. After a move to the downside, and after this move, we can see the price starting to move sideways, kind of a consolidation process here for crude, and we are inside of what we may call, and I think we need to be this channel being reinforced at least another time, but we are trading inside this channel. This is a parallel structure for crude oil, and as I said yesterday, instead of trying to short the market, at 88.6 because we are trading right below the previous fractal. I would prefer to pay attention to the 113% Fibonacci extension level, which is projected just a few points above and closer to the highs of the channel. So we have a alt bat pattern at 82.72. As I said yesterday, these may work better in terms of risk reward. The potential reward for this trade is a 4.7% reward. So we have our default target projected at the 38% Fibonacci level. So this will be my default target zone, 4.7%, which means we can't use more than a 4.69% as loss. As I said multiple times, I never enter the market to lose more than what I expect to win. This is the maximum that I can use, a maximum that I calculate, I measure the potential reward for that pattern. I know the pattern will invalidate if it starts to trade higher, above the completion point. So I can create kind of a range to work with and then adjust my stops. I can try to adjust my stops and search for a 1-2 risk reward approach or similar to that if you want to protect your trade, your position from this golden Fibonacci retracement. You can try to put your stops a few points above the golden fib if necessary, but you already know if the price starts to push higher, it will invalidate this sequence, and if that sequence invalidates, you cannot rely on the default targets anymore. You can't say, okay, the price, even though if you push higher, you will trade the 38% Fibonacci level. That's not granted, because if the pattern fails, you cannot rely anymore on those Fibonacci retracements as default projections or default targets. Okay. Note, one last note, of course, for crude oil. If the price fails to find resistance at the highs of the channel, the top of the channel, as I said yesterday, we may see the price squeezing higher and the formation of the crab pattern, which is now projected at 87.12. Okay, so let's not be surprised to see crude oil going, let's say breaking the channel, which is not a channel for now, but we have kind of a projected parallel channel or parallel structure. But if the price breaks above, searching for this golden Fibonacci extension level, let's also pay attention to that possibility. For now, I'm focused on this 113% Fibonacci extension, which will converge with the top of this potential parallel structure and a shining channel for crude oil, which may act as a flag, a bearish flag after this move to the downside. We are now into a consolidation, eventually moves to the upside later. Of course, pure speculation, we may see also a retest of the highs. I don't care what the market will do. I'm here to identify those type of patterns and to apply a strategy of risk to trade them. I'm not here to say, okay, the market will trade 500 points above or 500 points below. I don't care where the market goes, my friends. I want to identify the best pattern, which allows me to put some money at risk and try to take my profits over the process, during the process. WIT, SPX 500 still threatening the golden Fibonacci level. I don't think we have a lot of things to update the SP. No, actually, no updates required, already done. 4K 4 hours fractal resistance 3977, the recent support. We have the daily fractal resistance at 3884, remains there. The daily fractal remains also at 3798. Major support 3763, and of course the monthly fractal below and weekly fractal above. In fact, monthly fractal above. And as I said yesterday, we're still fighting the golden Fibonacci level. This may exert some pressure, but we are also facing this previous descending channel trend line resistance for the SPX 500. Many of you are already tired of this trend line resistance. We are expecting to clear this trend line to the upside. We want to see more bullish momentum for the SPX 500, but not for now. For now, we're still shorting gold, so that's the bullish momentum for SPX 500 is not good for our shorts on gold. We still I still prefer at least a moment of consolidation. Eventually it will take longer above the previous highs and structure support and the recent resistance. Let's see what will happen in this smaller range for the SPX 500. I don't want to see SPX 500 retesting the weekly fractal, at least for now. I need to see the pullback on gold, so let's stay here for now. And Nasdaq, very much the same. We are also facing, actually I don't have these Fibonacci levels here. We are also facing or approaching at least the golden Fibonacci level at 11,624. Note that we are already trading the 200% Fibonacci extension, a default target for this double bottom, so there's no need to update anything else for the Nasdaq. Also, copper found resistance at 4.21, a few points below the default target for this cup and handle formation. So I think it's all done for now, for today. Nothing really moved a lot. Bitcoin also, as I said yesterday, I still expect, we can expect a retracement based on this bearish bat pattern completed at 2800. So, and as I said yesterday, a move to the upside is also possible, so stay tuned. I'm not saying the price will fall from here. We had some nice overbought signals there on error side. The market starts to correspond, but then it starts to bounce again. So pay attention to this potential wedge also for both the Ethereum and Bitcoin. I think Ethereum is also printing something similar. We don't have a new higher high, we have a new higher low. We have the previous highs, the previous fractal, and we have a new higher low. So at this point it's a bit different for Ethereum, which may print a triangle there. Of course, if that happens, that will favor more upside momentum. A triangle should break in the direction of the previous trend. And that completes for today. We always finish with these crypto Bitcoin and Ethereum coins. And that being said, that completes my presentation for today. Let me also show you. I'm not sure if I can. Oh no, I'm only sharing this screen. Okay, I thought I was sharing. No, I'm only sharing this trading view. Okay, browser window. I thought I was sharing the screen, so I wanted to share other stuff with you, but that's no problem. I share that with you other time. So just to share with you the Discord server, because I'm now also on live. So if you are my subscriber, and if you are on Discord, you can also join me in the webinars section, charts and analysis. And if you click on that chat room, you will go into live webinar with me. So if you are a subscriber, pay attention to those events. And that's all for today. I wish you all a very profitable trading day. And if you are learning process, I hope you take some useful information from this channel. And we will be here tomorrow or a day after tomorrow, but we will pay attention to some of these levels, and as soon as I feel necessary, I will start another live show and webinar and start to share some of this content. Stay well. Thank you very much as always for being here. Don't forget to subscribe the channel. It's important for me to get that. It's a small signal of your feedback. I like to know if you really enjoy the content, and if you enjoy, I will keep posting more content every day. So again, thank you very much for being here. Have a nice week, and see you there the next time.